Hey guys, good morning. Welcome to Taipei Blockchain Week. I almost said Thailand, but we are in Taipei. And my name is Ian. I'm from Lydian Labs, and soon we're going to be rebranding into a name called Activate Lab. We do advisory tech and marketing, and we also provide a lot of back office services. So do come and check us out, chat with me if there's anything that we can help you with. And I am very, very, very blessed to be on this panel with these esteemed panelists, and I'm going to just give them some time to introduce themselves.
Cool. Thanks for having me. My name is CJ. I run the Asia business at GSR. I've been GSR for about 5 years. Prior to that, I was in the traditional finance space at Morgan Stanley and Nomura in the trading floor. GSR, I think many of you are aware, crypto is probably the oldest and largest market maker right now, regulated by the EMEA in Singapore. We work across the spectrum in terms of advisory, market making of projects, exchanges, OTC, venture capitalists. But yeah, it's great to be here and I look forward to the discussion today.
This is me. I'm Hank, CEO of Kronos Research. Kronos is a top market maker, a prop trading shop, and a hedge fund. We've been in crypto space for 7+ years now. So yeah, just happy to be here. And thanks for all of you guys to be here and listening to us babble.
Hi everyone, I'm Charlotte, and I'm representing the founding team members of Zomma Protocol and on-chain options, and I'm also heading the institutional APAC at CoinCo, the largest altcoin options trading exchange. So I have been in the space since 2018, and been mostly focusing on building and also options trading for the past, I would say, 4 years. Happy to be here as well with some of the leaders in the market.
Thanks, Charlotte. I'm Jason, CEO of Oracle of Preferences. We're a market research firm focused on APAC and the Middle East, and our claim to fame is creating digital twins and providing those insights to corporates looking to expand within APAC and the Middle East. Previously, I was part of a NFT project called Dotted, and just happy to be here with everyone and babble.
Amazing, amazing. I hope everyone's been enjoying Taipei. We enjoy at Taipei every year here, and this is my first time on the stage after 4 years. So, but anyway, staking, AI, amazing stuff. So I think the world of DeFi revolves around staking, right? And I think as much as it is a dry subject, but it is also a very, very crucial pillar to what decentralized finance is all about, right? Maybe we start off from the top, right? Just, I don't know. Elaborate a little bit. Don't give away your secret sauce in each and every one of your firms, right? Maybe elaborate a little bit on what you guys do for your clients, right? And how staking is actually one of the core pillars. Why your firms have a dedicated department for it? Yeah.
Sure. So I need to tread a bit carefully here, and the reason why is staking obviously comes under the world of DeFi. If you're a centralized market maker, DeFi and regulators are often at odds with one another. Look, the way we look at staking is it's almost as a service, dare I say it. We do it for a lot of our clients in terms of helping them running validators, running the nodes themselves, and staking there. I do think an area where we are seeing a bit of growth, and we can touch on this later on in other questions, but we are going to see maybe staking renaissance with the current spate of digital asset treasuries, which we're involved in quite heavily. GSR is advised and is the asset manager on 2 of those right now, UPEXI and MEEP on the NASDAQ. But I do think it is a direction that we're heading in.
So we're a major market maker and prop shop on most exchanges. And when it comes to staking, we're kind of like the ones generating the yield for the stakers. So we borrow from pools, we borrow from vaults, generating the yield for users. And the way we do that is to turn a profit while trading. So yeah, that's what we do in the staking.
So you're generating yield for CJ here.
Yeah, pretty much.
We all work together. It's a really nice ecosystem. Come on, guys.
Right. Charlotte, yeah, maybe just a little bit.
So I've been on options trading mostly. So like for staking, most relevant would be the liquidity pools, I would say. So GMX actually brought up a very interesting way of trading mechanism where you trade against liquidity providers, AMM in general. So what I would say on this part to be relevant would be our LP. They are not only be able to provide liquidity, they're able to have yields when they deposit and when they kind of, contribute and do the liquidity provision. I think this is a very economic way of, I would say, LPing, and then, order book in a sense that it has another layer of yields on top of what's already there for trading. It's a zero-sum game for a platform like us. So if the takers are making money, I would say the LP might be losing a little bit. So if the LP is like making money, so the taker might be, like losing a little bit in the trade. So I think for staking to be relevant on protocol like us will be making sure that it's going to be economically efficient for the liquidity providers, or known as the makers in general. So other than that, we don't really do much on that aspect. So yeah.
Our staking mechanism is a little bit different. For us, because we create digital twins of respondents, we ask users to stake a certain amount so that they have skin in the game, in the sense where we can prevent botting by removing the stake tokens if we discover this malicious behavior. But more importantly, because our terminal analyzes so much insight from different markets, our staking terminal allows individuals to participate in prediction markets. For example, recently we participated in an anime offering on Poly markets, right? And through our insights, we were actually able to hedge the bet, came about 40% profit. So our staking platform allows those insights for our general users, as well as preventing botting on our platform.
Got it. So out of the 4 panelists, I think only 2 are actively doing like staking, right? And 2 aren't. So I love the fact that you brought up about DATs. We'll get back to that after this because of CZ's long write-up last week. We'll get back to that and focus a little bit more on the whole AI team of Taipei Blockchain Week. So I guess this is a question for both CJ and also Jason. How do you see AI playing a role in your staking mechanisms moving forward, right? How does it benefit you as a manager of funds, and also for users? How do you see that benefiting them as well? So maybe we can start with Jason first.
Oh, absolutely. So one thing I didn't mention in the beginning, besides the info that they get from our terminal, our company is slightly different. Traditional market research does not reward the end user in the sense that their payout isn't aligned with being correct or providing valuable info. What we also do is split a portion of the profits that we take from our MRR over to stakers. So every 2 weeks they get a payout. So just on that front, they're monetizing their staked amount. Also, as I mentioned, they have access to the terminal that other people don't have, right? So if they're participating heavily in a lot of these prediction markets, which that in itself is predicted to grow significantly, they can generate upside from the data as well.
So wait, before that, so how do you see, like, because there's a kind of like a T plus 2 weeks kind of like situation here, right? So back to the same question, right? How would AI help your users in a sense? Because I know AI can help you with data and analytics. It can help you with auto execution of orders. But yeah, maybe you can
absolutely.
That, yeah?
So when the data comes in via the surveys, a lot of times it's all over the place, right? So previously it was analysts that would manually sort everything out, right? Now with AI, we can aggregate all this data and it can spit out not just the results, but a prediction on top of that, right? And it's obviously not financial advice, there's risk to it, but with this data, you're able to see a much clearer picture. The AI aggregates everything, plus it gives you insight into what could be possible. Not to mention, we run an AI to prevent botters, right? So we have a couple of mechanisms that we analyze the survey IP, how much time it was spent on each survey, how the answers differ, right? If 5 times you say you're male, 6 times you said you're female, well, that's a red flag, right? AI, we use AI to find the anomalies, and then those accounts get shadow banned. So aggregation of data and policing of our own data as well.
I think AI is such a big word, right?
I mean, I'm gonna come at it from a very different angle, and the reason why was I still remember I was on a panel in Hong Kong. I think it was a consensus, and I got asked a question about investing in AI. Look, AI is a buzzword, guys, but fundamentally, what does AI do? AI's value proposition is it helps us with the most important resource in the world. That is your time. It has the ability to sit through humongous amounts of data, and I'm not going to say AI is here to replace jobs. Well, that shouldn't be the mindset. AI is here to make our jobs more efficient, to make it better at what it does, right? I think applying AI across the spectrum of Web3, and I'm going to use that first before I go into staking, is a very dangerous mistake. That's the exact same problem if you think about when blockchain first came out, and the entire Web3 community was blockchain everywhere for everybody. And you're like, well, some things just don't even need blockchain. Let's be realistic about it. So I think with regards to that, staking is a very interesting dynamic. And we were talking about it backstage, right? It is unfortunately slightly on the drier side of things. And the reason why, well, because it's an infrastructural fundamental. It is necessary. If you go onto the street right now and you talk about financial markets, yes, the sexy stuff is what Goldman does, what Morgan Stanley does, what JP does, what Jump Trading does, what Citadel does. But fundamentally, you still need your retail banks, your commercial banks. These guys offer that pillar, and I think that's where staking comes in. Now, to directly answer the question, how does GSR use it within that realm? For now, we don't. And part of the reason we don't right now is we don't provide staking as a service as an asset management tool per se yet. What we do is, let's say we have a client, and the way GSR works with clients is almost like a capital markets provider across the spectrum of their needs. So market making is more often than not one aspect of that. Some of these clients will then say, look, the way our protocol works, can you help us run a validator node? That is where staking comes in for us. So because of that right now, there isn't a need to apply an AI layer to it, but that could definitely change if we go down that route of actual asset management. But to do that, obviously, you then look at the whole spectrum of regulatory hurdles, how should you do it, because ultimately then you are managing customers' money. So that's the next step there.
I think there's a degree of risk as well, right? Because I think feedback loops that were not caught can be very, very detrimental, especially when your AUM is like that big, right? And things can happen in a split second and millions can be lost. So probably, Hank, anything you want to shed light on that? Like, I do agree with the fact that, you know, what you brought up, CJ, like, even when we meet with like a lot of Web2 clients or traditional businesses trying to onboard on-chain, we tell them specifically that not everything needs to be on-chain, right? And Hank, shed some light on that, right? Is there even a need? I mean, we're looking to improve efficiency for sure. There are a lot of protocols out there right now that is actually successfully doing that, for users especially, right? I don't have to actively manage what I'm staking, and I'm just getting the best yield. I'm probably, getting an additional 5 to 8% APY. Is there a need for that?
Well, I think that, like everyone said, right, AI is great at sorting through large amounts of data and finding out the best path, right? So it is making markets more efficient in that regard. Whether AI should be everywhere, it's at this stage, definitely not yet. It's just not that efficient yet. But at least for us, we're using AI in many areas to expedite our research process, right? To sift through research papers, to organize ideas, right? Even from organizing the ideas to generating code and testing the code, right? So that's something helping quite a bit in terms of coming up with a new trading strategies, new way to generate yield, right? So it is helping markets to be more efficient as well.
Right. Then for Charlotte, maybe just as I'm just thinking, right, with the markets being more efficient, is it actually beneficiary for the larger part of the finance market? Because where there's input, there's output, right? So
So I think with AI, to some of the protocol like us, it will be very applicable in terms of the go-to-market strategies. I think AI does really help in terms of the go-to-market in the sense that we tap into the community in the more efficient way. So Zomma has also been building different tools and to add on AI. So I guess everyone might be imagining things like AI help optimizing trading strategies on our perspective, but not so much on our end, but I know a lot of other bigger funds and teams or even exchanges are doing that. And AI did optimize trading yields, but I think for protocol like us, we focus on the go-to-market because our team is very lean. So making use of AI allow us to, cut down on labor costs, that's number one for sure, and on a lot of the marketing costs in a sense. And running these AI model on, I would say, community and marketing and even promotional campaigns have been around for a few years already, right? Pretty mature from MarTech and moving on to with the AI adoption. So that helps a lot. And then we've been trying to implement that in a sense. And especially on Twitter X, I think what we found out is that the results is good in terms of responses, in terms of AI's automations, in terms of engagement. I think we are still optimizing in different aspects, but definitely for protocol like us and small DeFi projects, go-to-market is something that would be moving towards the AI adoption way.
Okay, so I think the picture is pretty clear here, right? I think everyone's just trying to be as efficient as possible, and time is essentially the largest cost for each and every one of us, right? Because we only have 24 hours a day. So we're going to move past this because let's touch on the more interesting subject, which is DATs, right? Digital asset treasury, is it just a different term? Because funds have been doing treasury management all this while. Come on, guys. So DAT, CZ's post was like highly viral. Everyone just started talking about it, but GSR has been doing this for ages, no?
So maybe in layman's terms, what is the digital asset treasury referring to? Yes, all foundations, you have a treasury. These treasuries need to be managed in some form or another to create yield for roadmaps for your operational costs. Digital asset treasury, more often than not now in the current climate, refers to the ability to find a listed company shell and to inject it on a core basis with their treasury of an underlying digital asset, so a web token of sorts. I kind of feel like it's getting a bit out of hand. I know the post went viral. I say this because GSR, like I said, we've been involved in one of the earlier Solana ones, UPEXI. And that one was a very interesting experience for us. We were able to do it because if you look at GSR's DNA, we are fundamentally TradFi guys, so that's where you are breaching. And because of that, I want to take a step back and say, think about what is the use case for a DAT. Why would you do it, right? Why would you buy a stock that the entire treasury is linked to an underlying crypto asset? Ultimately, it becomes two things. It's an access product, and it's also to price dislocations in the market when you talk about NAV concepts. Now, the interesting thing on an access product is, does that make DATs very opportunistic in a region like Asia? Yes. And the reason why is Asia has access to crypto. If you wanted to buy Bitcoin, if you wanted to buy Ethereum, the sheer number of exchanges and OTC desks in the region, Asia outranks the Western Hemisphere hands down, multiples. But the US doesn't have that, right? The ability for locals in the US outside of, let's say, your Coinbases of the world to access, to understand it, to make use of it, doesn't exist, which is why this came into play. Right. And what we've noticed then is there is a world, and obviously they're going down this path now, the concept of things like 401ks, asset managers like BlackRock, for instance, saying, look, in our portfolio diversification, under the equity component, we could sneak in Ethereum linkage. So there is value there, but I think what we have to be very, very careful about in the DAT cycle is as we go down the credit curve, and I say this based on experience, we run the risk of creating Lehman mini bonds part 2. And I say this because I was around when Lehman went under. I was literally opposite Lehman's office in New York when it changed to Barclays. And because of that, we are doing the exact same thing. Think about it. If your DAT is a combination of multiple altcoins, if one of them starts to default or becomes a rug of some sort, technically the value of that treasury is gone. And if that whole treasury was financed via debt financing, you are now in what we call in trading negative gamma. It's a downward spiral. It works against you. You have to liquidate other assets. So that is the risk. But to the point we were discussing, DAT suddenly brings about a renaissance for staking. The reason why is these assets are meant to generate yield for this corporate shell. And these yields, hopefully, will then be paid out in very conventional form as dividends. And that is the direction that we're going to see this taking hurdle.
What, Hank, from research kind of like perspective, right? Any light to shed on it? Because like, we need to get things right for the audience, right? So we want to make sure that people actually understand what it is all about.
DATs, my personal view is just a disaster.
I like how you're saying my personal view.
Yeah, it's well, I think I see there are two types of DATs now. One is like the MicroStrategy, they're able to raise debt unsecured, right? So they're not in that much risk of being margin called when prices go down. But the newer DATs, they're way more in risk of popping another bubble down the road, for sure. Yeah.
Right. Jason?
I mean, I probably have the least amount of experience with DATs, but what
It's
I can...
It's okay. We all do not have experience with it, right? It's like, I mean, it's another terminology that's been thrown out there that is highly confusing. At the same time, the only people that understand it are guys that are at the top level managing like huge funds. So I think it's okay. Just share your opinion on it.
Oh, I was going to say, actually, in Hong Kong, we're helping two firms look at DATs. They want to understand why individuals are buying strategy. They want to see what makes them deploy capital, right? So on that side, we're deploying surveys to better understand what these individuals like and what type of DATs would be the next MicroStrategy, for example. Is there interest in other altcoins? What drives buys? And that's actually super interesting. We're compiling out that research right now. The survey has been deployed, and it'll probably take about a week's time to conclude. And then from there, we're going to be able to advise these firms. But it's extremely interesting to see where all this is heading towards and what the data will potentially show.
Right. Then CJ, application of DATs for like national treasuries. Oh.
You're trying to get me arrested.
I mean, that's what we talked about, right?
I see a world where it works. And the reason why is, and I've said this before historically, when it comes to Web3, we need to bifurcate our understanding and our expectations. On one hand, within Web3, we have what we have here within Taipei, amazing builders. A lot of you out there, you have your own projects, protocols. You're building tech products. Hopefully, you find product market fit to make people's lives easier. That's one aspect. But there is an element where if you were to look at, and I'm not even going to go on the credit curve, but the majors, your Bitcoin, your ETH, there's value. That these are considered as tradable assets, which now we are understanding can be very akin to forex markets, bond markets, equity markets. They are alternative investments. Is there a world where we see national treasuries move in that direction? Let's flip it on its head, right? What is the purpose of a national treasury? What is the purpose of a pension fund? It is to safeguard assets. Let's be realistic about what the Sharpe ratios of volatility looks like within the Web3 space. It's not necessarily the safest. And so because of that, we just have to manage these expectations. We're not going to see, for instance, well, I hope we don't, some government out there say, look, 50% of our treasury is now going to be in Bitcoin. As much as we would love that, as much as an industry we would, we shouldn't.
Yeah, but I want to cut in here, right? There is a gold rush right now. Hey, I mean, okay, there's a Bitcoin rush right now, right? Where multiple nations are actually looking into it, like right now in real time. Like, I'm from Malaysia, right? I mean, you just remember from Malaysia as well. And we know that our Prime Minister just launched the Digital Asset Innovation Hub. They just launched a team, a committee to actually look into this seriously, and they are seriously considering it. Now, this is just only Malaysia, and Malaysia is just, okay, this big, right? we're looking at more and more countries. I think Hong Kong is looking at it, right? I think even Japan is looking at it. There's so many countries looking at it. So is the outlook truly that positive? And moving forward, we're looking at people talking about debt relieving, right? Debt recovery through digital assets. Is this even realistic?
I mean, so once again, that's a prop trade, right? You're betting that the value that you buy is going to produce better than other assets you have in your book. Now, I have a hypothesis, and it could be unpopular opinion. By the time we know that countries are starting to do digital asset treasuries, they've already done it. The announcement comes after the fact. The reason why is the concept of front running, right? Let's be realistic. Accumulation of these sorts of assets, they will do it quietly over time, and then they'll make the announcement. Yes, we're exploring it, but we have point something %. But I agree with you. It's good for the industry, but should we expect this to drive the market 5x, 10x? No. And the reason why is, to my point, yes, we will see more countries move into something like part of their reserves in Bitcoin, part of their treasuries in Bitcoin, but it's going to be a small percentage. Now, cumulatively, if you add that up, yes, it will make a difference in the market. But it is something that we have to look beyond what we think Bitcoin looks like and understand it from their point of view, meaning what do they look at when they look at these sorts of investments.
Hank, you want to kind of like, okay, let me maybe just change the nature of the question a little bit, right? Do countries need to have exposure into digital assets?
We just want your opinion.
No, because everyone's looking at El Salvador and it's like, everyone's like salivating, right? Oh, they 3x their treasury, right? So.
Well, I think something has value if there is consensus, right? So if all the countries agree Bitcoin has value and they all want to jump in, then this thing has value, right? And then we look at dollar. Dollar is losing value, so we do need alternative there. I do want to point out that Bitcoin volatility has been much lower than past cycles. So whatever CJ is saying is probably already happening, right? Yeah.
So Charlotte, given a choice, no, you don't have to expand on that. My question to you would be this: given that you have an option, would you buy gold or would you buy Bitcoin? Physical gold. I'm talking about physical gold.
Oh, okay. Interesting question. It's an easy one. Of course, Bitcoin.
Why?
What do you mean, why?
Oh, I mean, okay. Aside from us being in Web3 or in the crypto scene, right? Which would you buy?
I mean, I mentioned earlier, I've been in space in 2018, so I had Bitcoin back in the days, and I will always be having Bitcoin moving down. And only until when there is lesser consensus, which is not possible because it's only shaping more consensus on the value of Bitcoin, I will still be holding on to Bitcoin. Yeah.
Right. Jason? By the way, we are at the tail end of the panel, hence why I threw that question out.
For sure. I think for me, having been through multiple cycles, I'm sure all of us here have been burned once or twice, right? So for me, I think it's important to practice risk management. I would probably go 50-50, right? I'd hold 50% gold, especially if it's physical, and then take that other 50%. If I want to be more aggressive, then I'd point more towards Bitcoin, but I'd probably start with 50-50 to cover my butt.
Okay. We'll go to Hank first, because I know CJ will probably have a little bit more to share about that, but let's go to Hank first.
Well, I think gold is great as jewelry, right? And we're a 40-year-old men, so you don't need some bling to look good. But other than that, Bitcoin, yeah. I like Jason's answer a lot. I think we don't practice risk management enough in this space. We are literally YOLO, HODL, and Lambo moons, and you can see it with the 3 McLaren sitting outside there. It sort of shows you the mentality. But no, I think risk management is important, and the reason why is crypto is still fundamentally, yes, it's bigger now than it was in 2021, but fundamentally it's still a very nascent asset. And it's something that everyone is still learning about out there. And I think this goes back to the earlier point that Henry mentioned, which was about the concept of it's going to end very badly if a bubble pops within this space. We have to be very careful now because it's penetrating retail more than ever now. And that is where, when something bad happens, it doesn't look good on us.
Right. Okay, thank you guys. So thanks for sitting through what we call as a very dry subject of staking. But at the same time, I hope that we managed to kind of like make it a little bit more interesting for you guys. You know, kind of like discovering a little bit more on like things that are happening out there. So we have Jason, Charlotte, Harry, CJ. Thank you for your time, and hope you enjoy Taipei Blockchain Week.
Thank you.
Thanks, guys.
Thank you.
And we have you, Ian, to join us and moderating this panel. Thank you once again for joining us this panel, Trading and Staking at the Age of AI. I think they will want us to take a photo together.